Hello, everyone, and welcome to Fire Safe Sonoma's monthly speaker series. I'm Roberta McIntyre, the host. I'm also President and CEO of Fire Safe Sonoma, Sonoma County's countywide Fire Safe Council. And yeah, so if you missed last month's presentation, we had Merlin Schlumberger of the Merlin Arborist Group talking about things that arborists need to do and be aware of, particularly related to post-fire, tree work. And also he gave us a good kind of a snapshot of what arborists do and things like that. Can you tell I already forgot everything he covered? Okay, and then next month, if you haven't seen it, go on our YouTube channel and take a look. Next month, we'll have Mike Wilson from the California Fire Safe Council here to talk about the history of the California Fire Safe Council and all their programs that they have going on now. And that'd be a good one for folks who are Firewise community organizers and local Fire Safe Council community organizers to pop in to get a sense for what the California Fire Safe Council has to offer the individual groups there. Okay, so this month, we have a pretty good amount of people here, so folks realize the importance of this topic. This month, we have Durriya Syed from the California Department of Insurance on the program to talk about what the Insurance Commissioner's Office is doing about Wildland Fire Insurance. And with her today is her collaborator, Trace Gallagher, who will be helping out as we move forward, in addition to Mason and Marika helping me out. All right. Oh, also, folks, looking at this, if you want to see this in Spanish, we do have it on our YouTube channel as a Spanish version as well. And Durriya is a Northern California outreach analyst in the Community Relations and Outreach branch of the California Department of Insurance. She's been with the department for over 12 years in various positions. She's also been a senior fellow with the California legislature, and she's a community activist, which I love, and is co-founder of a local food bank. So Durriya, at this point, I think I'm going to hand it off to you and Tress to take care of it. And once we finish, and I'll go dark until you finish your presentation, and we'll open it up for Q&A. So you've got the floor, Durriya and Tress.
Thank you so much. Thank you, Roberta. Thank you for the invitation to join you today. My name is Durriya Syed, and I serve as the Northern California Outreach Analyst at the Department of Insurance. It is my honor also to introduce you to Trace Gallagher, our legislative liaison for the Office of the Ombudsman. She will be answering your questions today. I'm happy to be with you to give you an update on our wildfire safety regulations to help you drive down cost of insurance. Next slide, please. This may sound familiar to some of you since the regulations were approved in October 2022. The Department of Insurance worked with the state's emergency response and preparedness agencies, including CAL FIRE and the California and the Governor's Office of Emergency Services, OES, to create a list of actions you can take to protect yourself from wildfires. We call it Safer from Wildfires, SFW. This regulation directs insurance companies to provide discounts to consumers with transparency about risk rating. Insurance companies had until April 12 to submit their new rates to CDI for approval. The regulation required insurance companies that recognize the benefit of safety measures such as upgraded roofs and windows, defensible space, and community-wide programs such as Firewise USA and the Fire Risk Reduction Community, FRRC designation developed by the state's Board of Forestry and Fire Protection, which currently includes the counties of Los Angeles, Santa Barbara, Butte County, as well as cities and local districts. Next slide, please. Let's talk about the mitigation requirements first. Step 1, protect the structure. is pretty straightforward. Class A fire-rated roof, enclosed eaves, fire-resistant vents, multi-pane windows, and a minimum of 6-inch non-combustible vertical clearance at the bottom of the exterior surface of the structure. I know a lot of you in this meeting are familiar with the best practices. Next slide is about our immediate surroundings. Step 2. Protect the immediate surroundings, clearing of vegetation and debris from under the deck, clearing of vegetation, debris, mulch stored combustible materials, and any and all movable combustible materials within 5 feet of the building being evaluated, which we call BBE, incorporation of only non-combustible materials into that portion of any improvements to the property of BBE, which is situated within 5 feet of BBE. And 4, removal of combustible structures, sheds, and other outbuildings from the immediate surroundings of the home to at least a distance of 30 feet from the building being evaluated. The term building being evaluated is residential or commercial structure in question and includes decks that are attached or adjacent to the structure. In the event that the applicant or the insured does not control the entirety of the area extending 30 feet from the building being evaluated, removal of combustible structures from as much of such area as is under the control of the applicant or policyholder is advised. So for the purpose of this regulation, the property being evaluated should comply with Public Resource Code, Section 4291, and any applicable local ordinances governing defensible space. Next slide, please. And that's step 3. And step 3 of the Safer from Wildfire framework is an effort to obtain a community level mitigation designation. This will most likely involve at least one, if not more, local government agencies like fire, emergency services, planning, etc. Community level mitigation designations include FRRC by the Board of Forestry, as I mentioned already, and a FireWise USA site in good standing. The FireWise program is a nationwide program created by the National Fire Protection Association. So California has more than 500 FireWise USA communities with more forming, and it is an important part of California's effort to ensure communities are prepared against a wildfire. So California, Cal Fire's Office of State Fire Marshal's new Community Wildfire Preparedness and Mitigation Division works to assist local communities in receiving this designation. So for more information on creating FireWise program in your community, visit the National Fire Protection Association and Ready for Wildfireness website. And what I will do is after my presentation, I will put these links in the chat. Currently, some insurers are offering discounts for both or either community mitigation and property parcel mitigation. We do not yet know what new discounts will look like until insurance companies' rating plans have been reviewed and approved. There is a list of insurers currently offering discounts on our website. So next slide, please. Along with discounts, transparency is another very important benefit of this new regulation. We learned that most people did not know that insurance companies assign a risk score to your home or business. People need to know this information because if you know about the risk on your property, you can take action to reduce them and make yourself and your neighbors safer. So for the first time, the new regulation requires insurance company to give you a wildfire risk score for your property. And they have to tell you how they created that score, what factors went into the score. So the wildfire risk score or classification must be provided to you at the following 4 times, okay? When you apply for a new policy, within 15 days. Before you renew a policy, at least 45 days. Before you are non-renewed, at least 75 days, when you complete mitigation on your property and request a revised score within 30 days. By creating a right of appeal, the regulation is giving the power back to the consumers. And if you are not satisfied with the response, the Department of Insurance is on your side to help. Next slide, please. So this regulation includes both residential and commercial insurance lines. The property and individual buildings within HOA will need to be recognized for the mandatory property level mitigation factors listed in the regulation, such as clearing of vegetation, Class A fire rated roof, and other factors specified in the regulation in order to qualify for a discount. HOA may also qualify for other optional wildfire mitigation effort discounts an insurance company may choose to include in its rating plan. If an HOA is located within one of the listed community level designation areas, they may also qualify for a community level discount. So CDI and the CARE plan, and I'm really excited to share this, have reached an agreement to increase the commercial coverage limit to $20 million. We heard from legislatures, consumers, association, and other stakeholders before determining that increasing the commercial coverage limits to 20 million per location addresses the greater needs for homeowners and businesses, such as recreational youth camps, homeowners association, wineries, and group for additional coverage, and agriculture group for additional coverage. So, next slide, please. So under this regulation, we expect to see more businesses, homeowners, and communities making investment in wildfire safety, greater community resilience, reduced losses from wildfires, more insurance coverage for mitigated properties. We have heard from thousands of Californians who want to see discounts for wildfire safety and greater transparency. The regulation attacks the root cause of the non-renewals, which is wildfire risk, and they will make Californians safer. And with accurate pricing of insurance, we expect to see more insurance options for people through a more competitive market. The department expects that FAIR Plan to comply with the new regulation and offer discounts for wildfire risk mitigation and structure hardening. The FAIR Plan currently offers a 10% discount on policies in participating Firewise community. Next slide, please. So the Department of Insurance has created several online tools at insurance.ca.gov to help you score the market. Search for our top 10 tips for finding residential insurance for a summary of the information and options available. Our home insurance finder tool can help you identify those insurance companies writing in high-risk region to help narrow your search, and gives you contact numbers for licensed agents and brokers in your area. So we are here to help answer any questions about any line of insurance. Review your homeowner's policy if you have been canceled or non-renewed, or if you wish to file a complaint with the department. Please contact our hotline at 800-927 or online at insurance.ca.gov. We have a chat feature available for your use. This concludes my part of the presentation. And next slide for questions. I will be putting in the links in the chat, and now the floor is yours, Tress, to answer the questions. And I believe Roberta will be asking the questions.
Yeah, great. Thanks for that presentation, Durriya. And I'm going to start with a couple of questions we had from folks when we solicited for questions online. And let me see if I can find those quickly. I have one of the two in my hand, basically. So, okay, we had one. Let's see, his fire was destroyed in a 2017 Tubbs fire. He's chosen to rebuild and reinvest. Let's see, I'm going to get to his. Okay, here's his fundamental question. As carriers leave the market, which some have left California, at least a couple have, should the insurance commissioner begin to allow rates to increase enough to allow large carriers to operate in California? That's one part of his question. And then he also says, I would gladly pay a substantial premium in order to have the peace of mind of adequate insurance from a trusted carrier. Isn't compromise needed? Should there not be a substantial difference for rates for fully hardened houses and older non-hardened houses surrounded by dangerous fuel loads. And I think that speaks to regardless of whether you're in a WUI or not. Do you want to handle that, Tress?
Yeah, so I apologize. They mowed a field across the street from my house, so my throat is irritated. So I apologize in advance. So the part about a difference in rate for hardened homes, Durriya just covered that with the new regulation. If you have hardened your home, you will be eligible for discounts. If you're in a FireWise community, you're eligible for discounts. So that part's being addressed. There's a lot of information making the rounds these days about insurance companies' rates. And so hopefully I can clear up a little bit of what's happening and where we stand right now. So in 1988, the voters in California passed Proposition 103. Proposition 103, among other things, requires prior approval of all automobile, homeowners, and casualty insurance rates, no matter what the amount of the change is. Proposition 103 also authorizes a process for consumer participation in the administrative process of setting insurance rates and allows for an intervener to request a public hearing for any proposed rate increases over 7%. So insurers mistakenly think that a public hearing is guaranteed if they request a rate increase higher than 7%. In reality, the last rate hearing that we had that was not initiated by an insurer was on a homeowner's rate filing submitted in 2014, so 9 years ago. Since then, the department has received over 430 personal lines rate filings seeking a rate increase of greater than 7%. Not counting any currently intervened rate filings, only 10 of those over 430 seeking greater than 7% increase were intervened, and none of those went to a public hearing. So it's up to the insurance companies to determine how much of a rate increase they need and submit to the Department of Insurance. Many insurers ask for a 6.9% rate increase to try to avoid this possible public hearing. Once that 6.9% rate increase is approved, they ask for another 6.9% rate increase. And this just goes on and on and on. And using this method, they are never going to get to the rates they actually need to stay solvent. So again, it is up to the insurance company to submit to us the rates they need. Our actuaries will review it. They may get exactly what they ask for. They may get a little less than they ask for. But again, playing this 6.9% game, they're never going to get to where they need to be. And then in that question, State Farm was mentioned. All I can say on that is State Farm told the Department of Insurance when they made this decision to not write new homeowners policies in California right now, that they were going to leave existing policies alone. So should you at some point receive a non-renewal notice, please submit a request for assistance to the Department of Insurance. Durriya is going to put all those links in the chat so that we can look into your specific case. This doesn't mean State Farm is saying nobody's ever going to get non-renewed. Just they're not going to do like everybody gets non-renewed because we're not writing new policies, if that makes sense. I hope that answered all the questions that were in there. Oops, you're on mute.
I got it. I think they did. Okay, so then the next question we have that came to us through the internet prior to this presentation. The rebuild estimate is way low for the market value of this individual's home. How does she go about increasing the rebuild estimate? If she does increase the rebuild estimate, how big an impact will that have on her premium amount? Hopefully you can answer that.
So I want to start by clarifying that the market value of your home is not the same as the replacement cost of your home. Most policies are going to be for replacement cost. There are insurers that will insure for market value, but I think you would have to shop around for one of those. So market value is what you could sell the property, including the home, for. Replacement value is what it's going to cost to rebuild your home in the current condition that it's currently in. For example, if you have linoleum throughout your house, and God forbid you lose your house, Insurance is not going to cover the cost to put marble throughout your house. So replacement costs will get you back to where you started. The way to change that, insurance companies all have software that they use to calculate what the replacement cost would be for a home of a certain square footage and a certain zip code. But ultimately, it's up to the policyholder to decide and determine how much coverage they want. So if you think that your coverage is too low, contact your agent. Tell them what you think it should be. If you don't have any idea what it should be, talk to a contractor or two and get just kind of a general idea, like what's the cost to build per square foot in my neighborhood of a house like mine. And then again, talk to your agent, because it's ultimately your decision how much coverage you have. Insurance companies, they all do it in a different time frame, but every few years may send you a letter saying, hey, it's been 4 years since you changed your coverage limits. Our software says you need to add another $50,000 worth of coverage to rebuild. You can take that and run with it, or you can do your own research and say, no, I want 100,000 more, or whatever it is. So talk to your agent, and if you want to be able to present a valid number to your agent, maybe talk to a contractor or two just for some general per square footage costs.
Okay.
And as far as how your rates would be impacted, that's going to depend on the insurance company and their rates. So again, your agent should be able to say, if you increase by 100,000, your premium will be this. If you increase by 150,000, your premium will be that. So the agent would be the best person for that.
Okay. Looks like somebody just dropped in the chat how to become a Firewise community. That's all good. I do have a correction in terms of what Durriya mentioned earlier when she spoke of the number of Firewise sites in California. The number currently is actually 700 at least. Actually, in Sonoma County, one of our neighborhoods became the 700th Firewise community in California. And there's actually a couple of members from that community here with us today, Lynn Garrick and Karen Pasafero. Congratulations again for that achievement. Awesome. And Sonoma County is becoming more and more involved and engaged with Firewise communities and local neighborhoods. So when you guys do this presentation, be aware that there's at least 700 in California now and growing.
Thank you so much, Roberta.
Yeah, totally. No, it's exciting news. When you did your presentation, you had mentioned that you wanted to see, or insurance companies want to see, fire and ember resistant vents. And there is a difference. For example, this is 1/8 inch mesh. This is considered an ember resistant vent. And this is a Vulcan vent that'll actually seal up if there's a lot of heat right next to this device. So is it sufficient, do you think, to just have the ember resistant vent to qualify, or are insurance companies demanding that you have the more robust vent that not only protects from embers, but from thermal radiation heat as well? Do you know that? If you can answer that, you may not be able to.
I don't know it off the top of my head, but I'm looking to see if it says anything specifically. Oh, it does say ember and fire resistant vents, installing 1/16 to 1/8 inch non-combustible, corrosion resistant metal mesh screens over exterior vents.
Okay, so that's fine enough. You don't have to have the more robust vents, as I interpret that. That's good news. Okay, and then in the presentation, you mentioned enclosed eaves is what you like to see. But I'm wondering, is for open eaves with rafter tails and where they have the eave vents with like the 3 round holes, if it's acceptable, instead of boxing those in and enclosing them, is it acceptable to use, these real fine mesh vents that go inside of those holes to keep the embers out? It's my understanding that this is okay, to keep you from having to
Is-
box in your eaves, but I wonder if you,
Is that a soffit?
yeah, this would be a soffit,
Okay,
but
So
yeah,
installing soffits under your eaves can prevent heat and embers from getting trapped and igniting. When enclosing eaves, non-combustible or ignition-resistant materials are recommended.
when enclosing your eaves. Okay, perfect. That makes good sense. Okay,
Sorry, I'm just reading from a list. I don't know all this.
that's
off the top of my
okay.
head.
No, that's okay. It's good to hear, right from you guys directly. And then in your presentation, you mentioned that you like to see, we're all aware of the 0 to 5 and how important it is to keep that as a non-combustible area. But you also mentioned, use the term cleared vegetation out to 30 feet. Now, when you say cleared vegetation, does that, I'm guessing that doesn't mean, everything down to gravel or dirt. If someone has a Firewise landscape with native plants with good separation between them and reducing ladder fields, the distance between ground fields and bushes and the lower part of the crown of trees, etc. Is a fire resistant garden or landscape okay? Or when you use the term cleared vegetation, does that really mean,
So-
a rock garden?
So what I'm looking at, the 30 feet is removal of combustible sheds and other outbuildings to at least a distance of 30 feet.
Okay,
The cleared vegetation, weeds, and debris from under decks, non-combustible materials like concrete, gravel, and bare soil are permitted. So I think there's two different points here that were combined into one.
okay, that
Does that
makes,
make better sense?
I think it's a clear understanding, at least for.
And then as Durriya did mention, because this is an issue for some people who might butt up to parks or government lands. If you don't have 30 feet between your dwelling and your property line there, clear as much as you can. It's not a guarantee that you're going to qualify, but it's a much better chance if you do what you can.
Okay. And okay, our audience members need to step up and put some questions in the chat, you guys. I can come up with more. So one of the ones I have is, do y'all imagine that there's going to be a significant enough adverse impact to insurance companies with the advent of the Maui fire to create anything within the industry, the insurance industry, that we should be worried about now? Are a couple of smaller insurance companies going to fold, you think? Or should we not even consider that as an issue?
I think it's an unknown right now. I don't think we can address it.
Okay,
The last insurance company I'm aware of in California that had a problem that became insolvent and went into conservatorship was during the Camp Fire. There was a smaller insurance company that had oversaturated the market around Paradise. But going back to the whole spiel I gave you about the rates, part of our responsibility at the Department of Insurance is to make sure our insurers remain solvent, which is why you may occasionally see us approve something that looks ridiculously high rate increase. If they can justify, look, we need that 40% if we're going to keep being able to do business, then we would approve that. So I'm hopeful that there are not insurance companies that we share with Hawaii or that Hawaii has on their own that are going to go insolvent. Fingers crossed. Will it play into our rates here later on down the line? I can't speak to that right now.
okay. And then a question in the chat, it looks like we do have one. So she has a question about using a bar. Well, let me see if I can summarize the question or make it clear. So in her HOA, she's been told that her HOA cannot require that you're not allowed to put bark in the 0 to 5 foot zone, should she try to get her HOA to have a Firewise policy. Well, if you're in an area in California designated as high or a very high fire severity zone, you're not allowed to have bark combustible materials in the 0 to 5 period. That's a state fire regulation. If you're not in one of those areas and you are in an HOA and you want to feel safer by doing that, I'm not an attorney, let alone an HOA attorney. I don't know a lot about the Ralph Sterling's Act, but I do live in an HOA and have debated with them a couple of times. It's my understanding that your HOA can require more restrictive conditions as part of your ability to live there than what would otherwise be required. I don't know if they could require those on existing homeowners, if that would be retroactive or not, but they can modify their CC&Rs to be more restrictive even than the state regulations. Hope that answers that question. And did either of you two, Trace or Durriya, want to add to that, or can you elaborate on that perhaps?
Yeah, I can't speak to what the HOA is allowed or not allowed to do.
Okay. Here's a question. Yeah, okay, so just to clarify, it's my understanding that in the soffit vents, these, 1/8 inch mesh plugs would meet the requirement. Is that correct?
All I know is what I read to you that says installing soffits under your eaves. It doesn't call out what
Yeah.
degree of mesh it needs to be.
Yeah, I heard you, when you read it, I heard you say 1/8 or 16 inch.
That was for the vents.
Yeah,
So the vents is the 1/16 to 1/8 inch.
yeah,
For the eaves, it just says installing soffits under your eaves.
okay. I'll have to take a deeper dive into that.
So Durriya is going to share this link to this page I'm looking at, which is the Safer from Wildfires framework.
Okay, great. Let's see. Some of these questions I'm not sure are going to be relevant.
So the one about the ISO rating, can I answer that one?
Yes, please. I didn't see
Okay.
that.
Durriya went over this. It's part of the new regulation. So you can get your most current ISO rating during those 4 times she mentioned. If you're applying for a new policy, if your policy is coming up for renewal, if they're sent you a non-renewal notice, or if you have done mitigation work on your property, you can then contact your agent or the insurance company and ask them to reevaluate your rating. But those are the 4 times you can get them now.
Okay, so riddle me this. So ISO is Insurance Services Office. It's an independent organization that has a system where they will rank communities with a public protection class of 1 through 10. The closer you get to 1, the safer you are from fires in general. It doesn't really speak to wildland fires. So my concern with insurance companies that choose to use the ISO criteria, it's my understanding that some do, some don't. It's not a requirement. Some insurance, correct me if I'm wrong with any of this, it's my understanding that some insurance companies have their own way of measuring risk, and sometimes it's quite proprietary. The ISO system is somewhat proprietary. You have to be a math whiz to figure out their formula, how they get from here to there. I've done it. But at the same time, the ISO only measures fire communications, fire prevention, if you have a fire inspection program, et cetera, water supply, and your fire department's capabilities to respond to a fire. Basically, those 4 or 5 things that are measured. They don't measure your wildfire risk per se. So with that said, we've gotten calls, and I've heard from folks where, an insurance company rep will come out, look at their property, and apparently somewhat arbitrarily, they'll look at it, write some stuff down and say, oh no, we're going to decline your insurance. Now, given that insurance companies are apparently all over on the map, all over the map with how they assess their risk. Is there any effort through the insurance commissioner's office to standardize how insurance companies evaluate their risk, particularly in this space? Because it feels to me like it's all over the place and quite arbitrary, depending on what individual human being comes out and looks at your home.
Okay, so when I see ISO, I think of a different program than you're talking about. I think of the Fireline score because they're responsible for the Fireline score, which is a risk modeling score. Some companies use Fireline, other companies use CoreLogic, and there may be some other companies out there with the risk that do the risk score that way. I am not aware of insurance companies having people come out to properties to assess risk. As far as I've been here 12 and a half years. As far as I'm aware, they contract with one of these companies for a Fireline score or CoreLogic score. They get the information and they go with that information. If you dispute, up until this new regulation, if you disputed your score, it was very difficult to get them to change their mind. They have all of their information that they're using, in their algorithm, and you would have to work very hard to get them to understand, no, there's a second way to access my property with a wider road that the fire truck can get up, or whatever the case may be. With the new regulation, those are the scores you can request during those 4 times: the Fireline, the CoreLogic, and again, there's probably other companies that they use.
Yeah, that gets confusing. So for example, one of the folks wrote in the chat, my homeowner's insurance just sent me a notice of non-renewal.
Mm-hmm.
He asked for his wildfire risk score. The response was that they did not use risk scores in setting premiums. Therefore, they were not obligated to provide. Is this a correct interpretation of the regulation, or?
So the regulation, the regulation does say, and I apologize, I don't have it on the screen in front of me. It does say that these discounts must be submitted to the department for insurers who use wildfire risk scores to determine premiums. I think there's a handful of companies out there that don't.
Okay.
I don't know how they determine what's happening. Those may be the ones that send people out to properties. I've just not heard of insurance companies sending people out to properties. I have heard of insurance companies using satellite imaging. For example, Google Maps. They claim they don't send drones over your house, but I've seen people get non-renewed because there's a picture from above of some trash in the backyard, or a roof that doesn't look like it's going to last much longer. But as far as, and I'm not saying it doesn't happen,
Right.
but I have not heard of somebody knocking on the door to do an inspection unless it was prearranged. Sometimes the surplus lines insurers and sometimes the California Fair Plan will contract with some sort of investigator, I guess, and they'll set the appointment with you to come out and look at the property before they'll bind your coverage. The things they're looking for are, is there a bunch of trash piled up against the side of the house? Is the roof in decent shape? Anything that might make the risk of wildfire more dangerous.
Okay.
So yeah. So I don't know which ISO score that question was about, if it was the one you talked about or the one I talked about. My response was for the Fireline score.
Okay. Question in the chat. You mentioned, I think, that 3 or 4 times a year you can get a copy of the insurance company's evaluation with ISO ranking or whatever. Is there a way that an individual can, in between those opportunities, find out what their ISO ranking is?
Yeah, so
I think they might be able to call their local fire department in some cases.
Well, it depends on what rating you're looking for. So if you're looking for Fireline or CoreLogic, it's not 3 or 4 times a year. It's basically when your policy's coming up for renewal, or if they're going to non-renew you, if you're applying for a new policy, or if you've done work on the property.
Okay.
The CAL FIRE scores, that the high severity, I don't have the spiel up here. Those insurance companies don't use those maps so much. I mean, some of them may take that into consideration, but those are more for planning purposes for communities, like to see what the community needs to do and where they might be able to get some government grants and funding
Right.
to do some things. But those CAL FIRE maps aren't, as far as we know, aren't used by insurance companies to determine risk.
Oh, that's interesting. That's a good
It wouldn't be illegal if they use them.
right.
There may be some that do, but as far as we know, the majority do not. They're using these private scores from, CoreLogic and Fireline.
Okay, so I'm going to put you on the spot here. Feel free to not answer this question if you don't want to, but what's your confidence level that the insurance companies are doing the best job they can working within this space to provide a balance between, their bottom line and providing a reasonable service to their, to their clients?
I don't think in my role and position at the Department of Insurance that I can answer that. I'm not at the level that can answer that question. But I do want to make a comment here. And again, Durriya is going to post links for anybody, Mr. Height, who's got the non-renewal notice. Anybody who's got a personal issue, question, concern, complaint about your policy, your agent, your insurance company, and what's happening to you specifically, file a request for assistance with us. The way we learn what's happening out there and what companies are doing what and to who is by receiving complaints. We will look into your specific complaint. A lot of these questions you can't really give too much of a general answer for because they are specific. I don't know the reason for that non-renewal, but file a complaint. We will look into it.
Okay.
And I also want to add to Tress things that we have a live chat, and we know that insurance policies are not that easy thing to review. So we are here to review, and our callback time is 2 to 3 minutes. So we do want you to, yes, we do want you to encourage you to take advantage of all the experts that we have.
Oh, that's amazing.
Well, and that's if you have to get a call back, because most of the time you will get a human when you either do the online chat or you call the hotline.
Oh,
cool. Occasionally they're backed up and they'll say, hey, leave your number, we'll call you back. But more often than not, you're going to get to a person.
Gotta love Commissioner Laura. That's really good, you guys. That's awesome.
And we are very proud of that.
Yes, no kidding. I would be too. All right, we're going to try to get to a couple more questions before we jump off. We only have about 9 minutes left. So Bruce asks, I own a home in an HOA community. His personal insurance said he is not eligible for home hardening rate discount on his own home. They said discounts only apply to the HOA association coverage for the fire mitigation efforts across the community. So let me take a crack at that and then let you guys kind of weigh in on, whether Roberta's way out in left field or whatever. So my understanding is to get the discount related to Firewise, there's 3 fundamental criteria, and this is on the Safer from Wildfire information on the commissioner's website. Number 1, you have to do a certain level of prescriptive defensible space. Number 2, you have to do a certain amount of improvements for structural hardening to meet a criteria. Okay, it's not just those 2 at community scale. Number 3, you have to be a member of a Firewise community in good standing. That's the trifecta as I understand it. Those are the 3 conditions that open the door for you to get your insurance discount. Is that fair to say?
Yeah, that's fair to say.
Okay.
But to answer that question more specifically, it depends on if you're in an HOA because you're in a condo associate, a condo where you're all bedded up, or are you out in Oakmont where you have your own piece of property and an HO3 policy. So there's an HO6 policy for condos that covers inside your 4 walls, your personal belongings, additional living expenses should you be evacuated or God forbid the place burns. That's the condo. If you're in a condo, I don't know what you could do to harden that. But if you're out somewhere like Oakmont, by the way, I'm an Ursuline graduate. If you're out somewhere like Oakmont,
A local girl.
and you have a home and you have an HO3 policy, you should be able to get discounts if you've hardened that property. So it depends on what type of HOA you're in.
Okay. Yeah, that makes sense too. And then it's my understanding as well. Well, never mind. It's going to vary from insurance company to insurance company. I was going to say that in my experience, insurance companies, when they're looking at the, wildland fire risk of a property, they're leaning towards the IBHS's standard for the wildfire prepared home standard. It feels like that's the standard they're looking at mostly, in my experience. I shouldn't say mostly, but at least in my experience, that's the standard they're looking to, which is a little more restrictive than the state fire regulations.
Yeah. Yeah, you could be right. I mean, it's not like a law that they have to do that, but they could be doing that. And I wanted to point one more thing out about this regulation and the Safer from Wildfires framework that I didn't hear Durriya mention, but she may have, and I had missed it. You do not need to do everything on the Safer from Wildfires framework to get a discount.
Oh,
If you enclose your eaves and clear your vegetation from under your deck, you're going to get discounts for that. If you then add in ember resistant or fire resistant vents, you're going to get another discount for that. If you go the whole 9 yards and replace the roof with the Class A fire rated roof, you're going to get another. So it's piecemeal. You don't have to do the entire list of things and spend tens of thousands of dollars to get a discount. You will get a discount for each thing that you accomplish.
oh, very cool.
And so add to what Chris said too, is like the whole list that we have on our website and stuff, look at that. Everything that you do, you get the discount. Like you said, though, Roberta, that it's not standard. Every insurance company will have their own standard of giving how much discount they are going to give. So, so in that regard, we are suggesting or recommending that go and do the easy parts faster. So don't get overwhelmed that you just have to do this one. Just keep on doing what is easier and start from there.
Do this first. This is the best protection you can get with the most bang for your buck, in my opinion. Keep those embers out. Yeah. So, all right. I think we've covered all the questions. We're about out of time.
Okay. So if there are more questions, or if we didn't answer your question, please email us at CROB, Community Relations Outreach Branch. So CROB@insurance.ca.gov, and we will respond to your questions that way.
Okay. And Mason, if you could put that in the
And
chat.
Durriya is going to put that in the chat.
Okay, perfect.
Really, I have put everything that Tress said in the chat, and I've put that also, CROB@insurance.ca.gov.
Okay. And Trace, I private messaged you. I'm not sure if you saw that, but if you could take a look at that and then give me a call or touch base with me later, just so folks know it has very little to do with this conversation, if anything. But I had a separate, since she's a local gal, I have a separate question.
I moved to Santa Rosa when I was 2. And I left when I was 30. And my family's all still there.
Okay. Where are you? Not in Sonoma County now?
I'm over in Sacramento now.
Oh, you are. Okay.
I left. Some people may recognize some names. I was working for Valerie Brown in Santa Rosa, and I left to come work for Mike Thompson in Sacramento, and I'm still here.
When were you working for Valerie Brown?
In the early 90s.
Okay. Because she was still a supervisor when I was a county fire marshal.
Oh, well, I think she was a supervisor after she was an assembly member. I worked for her when she was in the assembly.
I gotcha. Okay, gotcha.
Yeah.
I worked with her when she was a county supervisor before Supervisor Barn.
There you go.
All right, we are about out of time, 2 minutes to wrap this up. So again, I'll do the drawing to see who gets that book on aircraft firefighting. And thank you, Durriya and Trace, for your time today. A fountain of information, and I like that there's a very short waiting list to respond to inquiries. You know, Commissioner Laura's office, that's amazing. And I'm sure folks will probably ping you both for more questions to challenges that they're experiencing. So again, thank you so much, everyone. Thank you for everybody who attended, and also special thanks for Julie Barnes for doing our Spanish translation today. She's amazing. If anybody needs Spanish translation, she's the go-to gal there. And then of course, there's my helpers, Mason Innumerable and Marika Ramson. Thank you guys all. And yeah, don't forget, next month we've got Mike Wilson from the California Fire Safety Council on to talk about what's going on there. All right, we'll see you guys.
Thank you so much, Roberta, and special thanks to Therese. I have to say it's a treat to have her because she has a lot bigger projects that she does, but because it's Sonoma County, and thank you so much for, you know, and thank you so much for having us.
Absolutely, and I'm glad you recruited her as a quasi-local gal to help out. All right, we'll see you guys. Thank you, everyone. Take care.